Welcome to Intro to Self-Employment. Again, we're so excited to have you here with us. I'm Holly Daniels. I use she, her pronouns, and I am the Senior Manager of Volunteer Resources at Prepare and Prosper. And it's just such a cool organization to work for, as you all know. I get to work with Sarah and Mary, dreaming about volunteer engagement and how we want to engage you all the best ways. And I also get to be in charge of training. And so really excited to collaborate with Julia Chang for tonight's training session. And Julia, this is me introducing you. There you are. Are you ready to kick us off? I think you're muted.
Sorry to cut you off, Holly. I have a
Oh yeah,
question.
for sure.
I saw on the email that we will be using the practice lab.
Yeah.
So should we prepare that, or you guys will direct us on how to set that up?
So, as another question to that, I tried to log into the practice lab and it's made me made me log in as myself for P&P and says I'm disabled, so I can't use it.
Yeah. What you might be trying to log into is the Pro online account, Chuck.
Oh, no, I clicked on the link exactly and then it took me
Yeah.
to it and I typed Train Pro Web and
Uh-huh.
then it wanted me to log in.
Yep. Yep. You all need to log in. And if you are not a brand new volunteer, then you need to click like forgot username or forgot password so that you can get back into the practice lab. It's whatever username and password you set up last year.
Yeah.
And it's confusing because you have two different accounts, right? There's the practice lab account, which you use basically only for certification. New volunteers also use it for training purposes. And then right before tax season starts, you're going to get your email from Sarah and Mary about what your username and password is for the Pro online TaxSlayer account, where you do the taxes. So this is the practice lab account, which you all set up your own usernames and passwords. And it's pretty user-friendly, I've found, if you do not remember how to get in. It will just email you the link to reset the username or password. And we're going to be getting in there probably I guess I don't know how many minutes from now. I don't want to tell you the wrong thing. But for the first part, Julia is just going to be kind of sharing some overview things with us to answer your question, Louise.
Okay, we ready to go?
Let's do it.
All right, can everybody hear me okay?
Yes, you sound great.
All right, okay. Oh. Okay, so welcome to Intro to Self-Employment Volunteer Training. We didn't change the slide, which said it's 3 hours, but it's actually going to just be 2. We intend this training to be an introduction to people who want to be able to handle simple SE returns at regular clinic, and also to be able to recognize what needs to be referred to the specialty SE clinic, all right, it's the self-employment clinic. So the materials for this training include the handouts in the package. There's a miniature self-employment tax organizer, a full self-employment tax organizer, the CETO guide, the MAEPD guide, which is part of one of the practice return packets. There are 2 SE return packets that we're going to go through as hands-on practice during this training. The self-employment manual has arrived. So if you come to the in-person training in January, Wednesday evening, the 7th, Monday morning, the 12th, you can pick up your spiral-bound self-employment volunteer manual. If you're planning to volunteer in the SE clinic, you'll get your own personal copy. There may be enough that we order so that advanced preparers and the regular clinics can also get a personal copy. All right, so training overview, we're going to do an overview of the tax program, then we'll dive into SE subject matter. We're going to do hands-on practice, processing an Uber driver tax return, and then an MAEPD tax return. That's medical assistance for employed persons with disabilities. right? So the self-employment program is focusing on taxpayers that have self-employment income and expenses, but we also do some plus returns for taxpayers who have multiple prior year returns, amendments to returns that did not originate at Prepare and Prosper. We assist independent contractors who want to contest their treatment as self-employment, as self-employed, so that they actually can be treated properly as employees. All right, the income guidelines are the same as for the regular clinic. A single person is 40,000, family household is 70,000. People who are eligible to use this program are sole proprietors and single member LLCs that the IRS also treats as sole proprietors. They're independent contractors. So a lot of the people who we see run businesses as artists, musicians, stylists, daycare providers. We see interpreters, people who have their own janitorial and cleaning businesses. And we see many rideshare drivers, Uber, Lyft, other gig type of driving, Amazon, whatever. So if a person comes in with self-employment income more than $435, they're going to have federal and Minnesota filing requirements, not just to deal with possible income tax, but also with self-employment tax. So you're going to see a slew of other return forms and schedules if you're self-employed, in addition to the regular 1040. All right, you will see Schedule C, profit or loss from business. You will see Schedule SE, self-employment tax. In regular clinic, you might see returns with qualified business income deduction. All right. So this year, our clinics will still be Monday morning, 9 a.m., starting January 26th through April 13th. Nothing on February 16th because that's President's Day. Wednesday, 5:30 p.m., January 28th, and we get to have April 15th, tax day. If there's a snow day, possibly we'll have a makeup clinic on April 3rd or April 10th. All right, in the regular clinics, versus the SE clinics, there are some things regular clinics are allowed to do when it comes to self-employment income. All right. You can do SE income under $10,000. If business expenses are under $25,000, you can only do one Schedule C per return. No net operating loss, no depreciation, no inventory, no business use of the home. All right. Any of these other red issues need to be referred out to the SE clinic. And I know you hate telling people, or it's maybe uncomfortable to tell people that they have to make a second visit, but when people are not properly referred to the SE clinic, we have had to amend returns. We've had to tell people they owe a lot more money. They've had to come back one or two or three other times. So it's best to have them come to the SE clinic as soon as you know they belong there so that we can do the return correctly. All right, out of scope. All right, we've probably all seen this before. No employees, no bartering, it's got to be cash. Accrual basis of accounting, nobody's selling a business, no bankruptcy, no actual car or truck expenses. We only do standard mileage deduction, no business entities, no nonprofits, out of state cryptocurrency, all of the stuff you cannot do. None of us can do this in any of our clinics. The resources that you have as a self-employment clinic volunteer are your PNP volunteer manual, pages 90 to 96, focus on SE, but you'll get a lot more in-depth guidance out of the SE volunteer manual. Publication 4012 has some information. You want to refer to the instruction booklets for Minnesota State Income Tax Return M1 and Property Tax Return M1 PR. Publication 17 and all the other publications that you can download from irs.gov will offer additional guidance. All right, there's our volunteer manual. There's a table of contents. There's an appointment screener for figuring out when somebody needs to come to SE. Okay, we'll skip about foreclosures.
Hey,
So the
Julia.
customer,
Julia.
yeah, yeah,
Jerry is asking, is SE income net income after business expenses in terms of
okay.
the
So,
income
all
limits?
right, I wasn't going to say this, but since you asked, SE Clinic is very forgiving. So people who come into SE Clinic, even if they tell you that they exceed the income limit, by the time they deduct their expenses, they'll probably come back down. Right? We're very forgiving. All right, so just have them do their CETO. We'll talk about it once they come to the clinic. So the tools that are available to be an SE volunteer. This is the most important one, I feel, the self-employment tax organizer. People have all different ways of doing their accounting. Right? The biggest thing that a client has to do is they must finish their accounting for their business before they come to their appointment. Except, if they're pretty simple, like coming to a regular clinic, you might have to help them do this. But if they show up without their accounting done, you have to help them do some work to complete their accounting before you can complete their return. So the self-employment tax organizer, if you see that in your packet, in your packet of handouts, this is intended to create a standardized presentation so that you can pretty much zip through it to enter information for your tax return. And it's also designed to help the reviewer review the return, right? We don't want people to bring all their receipts in. We don't want to see their financial statements. We don't want to see their Excel file. We really want their information summarized on the self-employment tax organizer so that you can just go through its 4 pages and get the information into the tax return. Okay, are there any other questions, Holly? I'm not really watching that.
I was wondering if you would address why we did not provide the self-employment manual for tonight's training, Julia.
Well, if people are able to come in and pick that up, but we also have a PDF file version of it. Is that ready to be uploaded into
No, I was
tools?
hoping you would say the thing that you said to me, which is we don't want to scare them away.
Oh, all right. Okay, so why are we not handing out the heavy duty tools tonight? Partly because we don't want to scare you. There are things that you can do in the regular clinic if you're certified to advance, right? You need to be certified to advance in order to do an SE return. What we're talking about tonight is to equip you to do the returns that regular clinic is able to handle. The manual has in-depth information about topics like business use of the home, depreciation, let me see, what's the other big one? Cost of goods sold. So those things are pretty heavy duty, and they're not something that you are allowed to handle in regular clinic anyway. So we want you to move into this area of tax preparation slowly. Okay, you're going to work your way up to loving the self-employment volunteer manual, right? So maybe by the second or third week of tax season, you will really want to have one of the volunteer manuals, but we want to get you into this gradually. Okay, we're going to work your way up to the volunteer manual. But what you will see, even if you don't use it, is the self-employment tax organizer, which very much reflects Schedule C. And then you're also going to see things like the mini CETO. Okay, so CETO is very important. The daycare CETO is very similar to the full regular self-employment tax organizer, but it has a few other sections that allow the taxpayer to enter information that is particular to holding a daycare in your own home. Okay, you need to know the days that you use, that you're running the daycare, the square footage. All right, this has to do with business use of the home. So we're just going to go through this kind of quickly. so that if you see it again in the regular clinic or you see the handout, you'll recognize it. All right. There's something called a standard meal and tax rate that daycare providers are able to use rather than keeping receipts for all the food they buy for the kids. All right. The guide, which is good for both the full CETO, the daycare CETO, and the mini CETO, gives information about how to fill this out. So I think that if you read through this CETO guide, which is only 6 pages, this is a good way to introduce yourself to self-employment. Right? This is intended for people who don't serve. I mean, this is intended for the taxpayers, so it's fairly simple, I hope. And if you can read through this, then I think you have started to build yourself a foundation for doing self-employment returns and to read through the self-employment volunteer manual. Right? I mean, I do really encourage people who are going to volunteer in the SE clinic for the first time to read this manual cover to cover. It's only about 40 pages. All right, here's the mini CETO. If you have your scenario printed out, there is a miniature CETO in the Gig Young package. And again, you'll see that it's only 2 pages. Is in gathering pretty basic information. Anybody who comes in to do a self-employment return, we need to know what their income is, and we need to know what their expenses are. All right, so there is a tool that I'm working on updating to make available on the website. If people don't have a way of doing their accounting, they could use an Excel file like this. It's more useful to have the electronic version because an Excel file has all sorts of formulas. And if you plug numbers into this tracker, it will do a lot of calculations for you. So, trying to use a tracker by hand and writing in, it's not doing 90% of the work that it's designed to do. All right, so then for our customers on our webpage, there's a whole page with links to tools, particularly for people who are self-employed. These are not yet updated for 2024. All right, is there a question? Oh, that's just somebody ringing the doorbell, right? Okay, so people would be able to download the CETO, their guide, some handouts about business expenses. The reason that we want someone to use the electronic versions of these self-employment tax organizers is these are fillable PDF forms, so they can type, make changes, and then print out the final version nice and neat. All right, the CETOs do not do calculations for you. So, if you enter totals from your tax documents, it is not going to calculate a total amount of income for you. But if you see the CETO as a volunteer, it is a good check to know if you have all the tax documents that are required. All right, other clinic handouts that will be available are an amendment request form if someone or you discover that they need to amend a previous return, a guide for how to do electronic payments online, a guide for how to make estimated tax payments when you're self-employed. Nobody is withholding taxes for you. So you have to take responsibility for paying along the way as you go. All right, some basics about sales tax in the state of Minnesota. If your business provides services or goods that are subject to sales tax, and also the MAEPD medical assistance for employed persons with disabilities. We have a handout with small business resources. We love Minnesota Legal Aid and University of Minnesota Law School because a lot of our customers are going to end up with balances due and may need assistance there. All right, so here we're going to dive into subject matter. The biggest difference between SE and regular clinic is that you have to help people, or people have to figure out their own income. All right. It's not like a W-2 where that's the income. You have to help people figure out income. So the basic concepts here are an independent contractor who is a business owner, non-employee worker, might be misclassified. This is the business owner. This is the person who is self-employed. Income means revenue from their core business operations. What are they doing in their business? Are they a driver? Do they style hair? Do they do nails? Do they clean houses? All right, core business operations comes from the main focus of the business. And there may be some incidental income, maybe a little interest from putting their cash into a business savings account. All right, the other basic concept is expenses. If you spend money to operate your business, you are able to deduct those expenses from the gross revenue to arrive at the net income, or it could be loss. All right, so if your revenue exceeds your expenses, you have a positive profit. If you are spending more to run your business than you earn, you're going to have a loss. Now, earned income, this is also really important. Earned income comes from work, from active work. Just like a regular job, which is employment, self-employment is also earned income. And as such, it is subject to Social Security and Medicare tax. All right. And so if you do a self-employment return, you have to be rock solid on this concept of self-employment tax. Whenever you calculate tax, it's always tax rate percentage times the tax base equals the amount of tax that you have to pay. All right, just like sales tax. Sales tax rate is 9% in some states if the base is the cost of the thing you bought. So if you buy something for $100 and sales tax is 9%, you pay $9 of tax. For earned income, you have to pay 6.2% for Social Security taxes. You have to pay 1.45% for Medicare. So that is a total of 7.65% for the employee. The employer matches another 7.65%. So the total self-employment tax rate is 15.3%. All right, let me back that up again. All right, 7.65 employee, 7.65 employer, total 15.3% is the self-employment tax rate. Now you have to figure out the tax base. So 100% minus 7.65, because 7.65 is an adjustment, it's a deduction for the employer. That comes out to be 92.35 times the net income is equal to the base. So you don't get taxed on your entire net income, you get taxed on 92.35% of net income. The reason you have to do this adjustment after figuring out your profit is that if you did this as part of your net income, you would be going around in circles. So the SE tax base is 92.35% of your profit. Multiply that together, you get your SE tax. All right, here's an example. Let's say after you do all your calculations, the net profit on your business is $8,000. So 92.35% of 8,000 is $7,388 times the 15.3% gives you a self-employment tax of $1,131. And that does seem kind of high. You know, the person only had an $8,000 profit, but they're paying over $1,000 just for Social Security and Medicare tax. The reason it's so heavy is that a person who's self-employed has to cover both the employee share and the employer match. All right. So
Juliet, question for you.
Uh-huh.
Linda Silver is asking in the chat, doesn't TaxSlayer calculate the tax for you? So I think that's a good
Yes.
question. Why would you say that they still need to be rock solid on that concept, even though
You
it's done
have to
automatically?
understand why this works. Why you have, because when somebody ends up with a big tax balance, they're going to be upset if they're this is the first time that they've done self-employment and they're not expecting this. But I also feel that when you do a tax return for somebody, you need to understand very well what's going on with the return. So I'm happy if you understand this well tonight, and then you don't have to really think about it. You do not calculate the self-employment tax by hand. TaxSlayer does this automatically. But you want to understand the difference between working for yourself and working for an employer, right? People who come in with a W-2 form, they only have to worry about their 7.65%. They don't have to worry about holding enough cash to pay this on their own because their employer has already taken care of all of this. The employer is legally bound to withhold and remit the proper amount of taxes. When you're self-employed, no one is doing that for you. And this is why so many of our self-employed taxpayers end up with a heavy balance due. And whether you're the preparer who is working with them or the reviewer, or maybe even the customer service customer service volunteer who is checking them out, at some point, someone who encounters this for the first time is going to really want to understand why. They will be upset or they'll just be very curious. But I feel that if you're going to do an SE return, you really need to understand that this is the biggest difference between doing a return for somebody who has either only employment income or all sorts of other income, pension, social security, interest, dividends, that is unearned income, not subject to the SE tax. All right, does that help?
I don't want to speak for Linda, but I think so.
Okay, all right. All right, so maybe some of our experienced volunteers could say, what's the biggest balance due you've ever had to share with your taxpayer?
And Julia, are you talking about all clinics or just self-employment clinics?
It could be all clinics.
Okay.
$4, $5, $6,000. I think that people in the other clinics are more accustomed to seeing really large refunds, you know, $10,000, $11,000 from earned income tax credit and child tax credit. Well, the thing is, you know, with self-employment as well, because this is earned income, if somebody comes in and you're able to tell them, you know, you do have a really good profit from your business, all right, you made $20,000 net profit from your business, and this has enabled you to claim a $6,000 earned income tax credit, you know, $3,700 Minnesota child tax credit. So having earned income, it helps the taxpayer in the same way as working a job. It enables them to claim earned income tax credit, additional child tax credit, Minnesota child tax credit. It having this earned income helps them build up credits at Social Security for drawing benefits when they retire or, God forbid, they become disabled. So one of the things that you tell people is it may be painful to pay the taxes right now, but this is building up your benefits with Social Security Administration, which, you know, you might be thankful when you retire in 20 years from now.
Hey, Julia, this is
Yeah.
Andy. This
Hi,
is a
Andy.
very important conversation. Uh, I mean, because this is the most aggressive tax we have. And it is a surprise to a lot of people. So if you can ease them into, you might have to pay this, like you're saying, and it will help fund your future benefits or something like that. I mean, the best time to kind of warn them that there is a tax like that. You might even ask them when they're coming in, have you looked at that or paid it, and then get into it.
Okay. Yeah, thank you, Andy. And so Andy said this is a regressive, regressive tax. It is a flat tax, 15.3. It does not scaled to your income the way the progressive income tax is, right? This is a flat tax. No matter what you make, if you make $8,000, if you make $100, or let's say $500 profit, if you made $50,000 profit, you're going to owe 15.3% tax up to the first, I think, is $125,000 of income. All right. And then after you pass that 100 and whatever X amount of dollars income, it drops off. So, it's 15.3 until you drop off the cliff to zero. Okay. So then if anybody wants to share anything in the chat about if you've had to tell somebody that they owe $7,000 for self-employment and income tax because they have not made any quarterly payments during the year, just share your experience with how you talked them down. All right, I've had to do this. I've had to step in for the reviewer or a site manager who had a customer that was very upset about how much they ended up owing from their first year of being an Uber driver, and they don't understand where all of this comes from. All right.
Yeah, I would say if someone wants to share in the chat or share out loud, anything else about how you have talked someone down or soothed an upset customer.
Hi, this is Mohammed Iqbal speaking. Can y'all hear me?
Yeah, hi, Mahmoud.
Yep, I recently filed as self-employed, so I was on the filing. I can see this from the filer's point of view, and it's a shock in the beginning, and how you talk to them is, important because a lot of people don't realize all the taxes. You don't believe the number, and it may require, for some people, it may require that you explain it, maybe even show a spreadsheet, but just like walk them through, this is how it works, and this is to be expected. Eventually they'll get it. And then you just share tips with them on how to prepare for the following year if they're going to file again as a self-employed.
Okay. All right.
Yeah, thanks,
Thank you.
Mahmoud, for sharing the filer's perspective.
Yeah, and this is Andy. The other thing is, next year you can talk to them about what's going to happen the following year and how they can plan it to make sure they take all the expense deductions they can in 26 so that the profit that this tax is going to apply to is lower.
Mm-hmm. Yeah, I just spent 3 hours today with SE taxpayer, and we talked about expense strategy. Like, how are we going to expense a major investment, not all in one year? Yes, all in one year, or over, how are we going to do this over the next 5 years? There is some flexibility in how you can expense your major how you can spread out your major expenses. Okay, but that's actually part of the specialty clinic. So, all right, let's get back into record keeping. The most important thing that you have to help your taxpayer understand is that they have to keep records, right? If they're working for themselves, they have to do something to track the amount of income that they earn and the amount of expenses on which they spent cash to run that business. All right, things that you might have to ask them is like, do you know how much you made per week? How many weeks did you operate your business? Can you see electronic payments in your bank account? Does your 1099 NEC form account for all of your income? Did other people pay you directly in cash that you need to report as income for this business? Did you use your own car your own cell phone, your own internet access, your internet service at home. All right, did you use any of your home for business? All right, again, that means if they say yes, you have to refer out. But for this clinic, again, we're going to start out simple. The packet is not going to be very complicated. If you run into something where, they have no idea what their accounting is, like where their money came from, where their money went, they're going to have to come back. Okay. You cannot do their accounting for them. I know some of our volunteers, sometimes I break down and I cave in and I do too much of their accounting for them, but for their own good, they have to do their own accounting. And if they want to continue running this business, they have to understand how to get better at this. Okay, so income. Income can come from being paid to offer services, from retail sales of goods, from commissions for doing work, even grants or royalties. In the regular clinic, okay, we're working up, we're starting simple. Most of the returns that you do in the regular clinic are just going to be payment for services. All right. You can't be doing sale of goods because that involves cost of goods sold. You're not allowed to do that in the regular clinic. So let's just start out payments for services. That includes driving for Uber. It includes doing janitorial service. It includes maybe doing hair. All right. Like we said before, SE income is earned income. Earned is wages, it's salaries, tips. Self-employment income is subject to the Social Security and Medicare taxes. It's not like taxable Social Security, interest, dividends. Nobody's paying SE 15.3% on those other types of income on the right. So these are different ways that people can keep records of their SE income. They have receipts, ledger, maybe they do it in a spreadsheet, QuickBooks, Quicken, bank statements. It could be 1099 NEC, miscellaneous K. Somebody for the first time gets one of these tax documents. They say, I'm not sure what this is for. But it said important tax documents, so I brought it in. And you look at it and say, aha, this means you're self-employed. And now all of that information gets summarized on the CETO. We do not want them to bring the stuff up in the gray. All right. Once they summarize that information and put it on the CETO, they can leave their shoebox at home. All right. They can leave all of their check stubs, banks. That we don't really want to see their monthly statements. All right. We don't really want to see their notebook. What we do want to see is their gig report or their tax summary from Uber and anything that says important tax document. All right, these official tax documents, the NEC, MISC, K, maybe a Schedule K1, these have EIN numbers on them. The IRS also knows about these documents. And if you don't embed the information, especially the EIN, if you don't enter that information and the tax document into TaxSlayer, the IRS might wonder if you've reported all of the income. All right, so you have to bring those green forms in. All right, here's an example of what an NEC looks like. It will have an amount in box 1, non-employee compensation. This means the person is self-employed, being paid as an independent contractor. They are running a business. All right. Sometimes people don't understand or believe it. But if you see a 1099 NEC, you have to tell them, congratulations, you are a business owner. You might see a Form 1099K. Some of the rideshare drivers will get a 1099K from Uber and Lyft. I will show you how to enter this information into TaxSlayer. Right, so if people get paid with a credit card, once they have a certain amount of payments, and it might be 10,000, might be 20,000. Amazon or Uber or whatever will issue them a 1099-K, and you have to report this amount of income on your Schedule C. All right, you might see a 1099 miscellaneous, and this is harder. Sometimes people get one of these documents and they don't realize that they're self-employed, and you as a tax preparer might also miss that they're self-employed unless you interview them carefully and establish what this income really was. All right, we did have a situation where somebody received the 1099 miscellaneous, and for 2 years we filed this person not as self-employed. And then the third year when they came to SE Clinic, or that's when we discovered actually they had 3 years of self-employment income, and we had to amend the other earlier 2 years, and they ended up owing $6,000 on SE income because their employer paid them on the wrong document. Sometimes you have to talk to them to figure out that, oh, this really is self-employment income and it needs to go on Schedule C. All right, the expenses that you might see in regular clinic are, we're not doing the heavy duty ones, we're just working up to it. A business expense is ordinary and necessary to running the business. All right, it's accepted for the industry, it's appropriate. All right, and these are expenses that the IRS expects to see. All right, general expenses, there's a whole section on Schedule C. During break, you can look at the Schedule C more carefully, and you'll see in there's a whole, part on Schedule C that gives you spaces to put in things that I say, these are the expenses that the IRS likes to see. All right. In SE Clinic, you'll see almost all of these. In regular clinic, mainly you'll see commissions and fees. All right. So a person will come in and put commissions and fees on their CETO on that spot. And when you go into TaxSlayer to enter general expenses on Schedule C, you'll find a spot to put in commissions and fees. And when you print out Schedule C, you'll see on this part over here, it'll end up on Schedule C on the right line, commissions and fees. All right, other expenses, we put business percentage use of cell phone or internet in the section called other expenses, which is also in TaxSlayer. All right, most people only have a single phone. Sometimes they use it for personal, sometimes they use it for business. If they're using their phone 65% of the time to pick up rides and stay in touch with Uber or whatever, they get to deduct 65% of their annual cell phone expense, right? So here's a section on the CETO for you to enter the annual cost for your cell phone. If this person doesn't work a lot, they just gig drive maybe 30% of the time, they're allowed to deduct $360. All right, you're going to go into other expense section in Schedule C in TaxSlayer, and then once you enter it, it will end up on Schedule C in Part 5. All right, it's very important for a gig driver especially to track how much they use their car. All right, Uber and Lyft externalize the cost of their fleet onto the people who drive for them. All right, we only do standard mileage rate. Everything down here, actual expenses, when somebody says, I have all my gas receipts, you tell them, we don't go by actual expenses. All we want to know is your business mileage. All right, now what is business mileage? It's mileage that you're driving for business purposes, and all you have to do is deduct 70 cents for every mile that you drive. If you park or pay for tolls to go over a bridge, that's separate. So you do want to track that. All right, let me see. All right. Business-related trips are always work site to work site. It's not commuting. All right. If you drive from your house to your job, you're not allowed to deduct that mileage. That's considered commuting. So the same thing with self-employment. You can see this kind of a little dim place. If you're driving from your house to a work site, that's business mileage only if you have a home office. So let me see. Here's the better picture. Okay, so just go by the picture. If you go from your house to your job and then drive home again, those are both considered commuting trips. Whether you're self-employed or employed at a regular job, you are not allowed to deduct the cost of driving to and from that work site. Now, if you have a day job and then a different self-employment job, okay, going from your house to your regular job, that's commuting. You don't get to deduct that. But then you leave that W-2 job and go to the second place where you're doing hair or cleaning an office. Driving from this work site to this work site is commuting. So if you put 10 miles on your car, you get to deduct $7. Okay, 10 times 70 is $7. And then when you leave that work site to go home again, that's commuting and you can't deduct it. So here's something typical for an Uber driver. You're at home, you're waiting around, and you see, oh, somebody wants to pick up. So you drive to pick that person up. This is commuting, you can't deduct it. You take them and you drop them somewhere else. This is business, you can deduct that. All right. Then you wait around and you get a call for another rider. So going from the first drop off to second pickup, that is also deductible business mileage. Then you drive from the pickup to the second drop off, you get to deduct that. That's business mileage. You go from the second. Now, okay, you've dropped the person off and then you need to do some business related work at your business bank. That is also business. Now you're done and you drive home. So you can't deduct this one or this one, but everything in between you can deduct. All right, now Uber's pretty good about giving you all of this mileage. They're not going to pick up this, so you have to be careful to record that yourself if you're self-employed. Lyft, I think, is bad about picking up this in-between mileage. So hopefully people have not just the record that they get from Uber and Lyft of their driving mileage, but they have some kind of an app or another way to confirm and pick up the mileage that Lyft might not give you, and operating your business and doing other errands related. Okay, Lyft is not going to give that to you either. But if all you do is drive for Uber, I think you can go by the summary that Uber provides. All right, we won't really see much for business travel. Let's skip that. If somebody tells you that they want to deduct the cost of buying lunch and eating in their car while they're waiting to do a drive, they cannot do that.
Julia,
right,
we
so-
have a few questions in the
Okay.
chat.
Yep.
AJ is wondering about if we recommend a method or tracker for people recording business mileage.
Okay, I know that there's some things that you're able to download or go in the like the Apple Store app store. Okay, I have never downloaded one myself, but I have worked with some of the taxpayers here, and I know there's one that somebody likes a lot. It's we can get that to you, all right? But yeah, Holly, let's just keep track of that, and we'll come up with some recommendations, all right?
Yeah. Oh, Jessica
Yeah, that's
Anderson
it.
says that.
Stride. That's what it is. Stride.
Nice. Thanks, Jessica.
Okay.
Chuck
Okay.
also had a question.
Yep.
Oh, Mahmoud, do you have thoughts on this?
No, I had a question, but I can wait after the chat question.
Okay. Chuck's question in the chat was about
the
the
home
requirements.
office.
Yeah.
Okay. The requirement for a home office, it doesn't have to be a whole separate room. It doesn't even have to have a separate entrance. It has to be space that is regularly, exclusively used for business. That's okay. The key is regularly and exclusively used for business. All right, that's for a regular house. Daycare, CETO, daycare, that's different because nobody's going to operate a daycare 100%. So that's why there's space on the CETO for recording the days of operation. But the key is the space has to be regularly and exclusively used for business. So if somebody is clearing off the end of the dining room table to do their business accounting, they can't say, well, I use my dining room 5% of the time for business and I'm going to write that off. It has to be a separate office exclusively used for business operations or even storage. So this is something that if someone says, well, I want to write off part of, using part of my house or my apartment for business, you have to refer them to SE Clinic. Okay, Steve says something else called MileQ. All right.
Mile IQ.
Okay, Mile IQ. All right. Okay, well, if you end up paying for the app, that's a business expense. You can deduct that. All right, so SE tax payments, look, we talked about what do you do about this 1131? Well, if you try to pay it all off at the end of the year, you might get penalized for underpayment of tax over the year. So people who are self-employed need to get used to how to do estimated tax payments. If year after year, or even the first year, they discover that they owe a lot. We do have some taxpayers because they have kids and they usually get a pretty good earned income tax credit. They might not end up paying anything because the earned income tax credit will cover their self-employment tax. Now you have to be careful. The child tax credit and non-refundable tax credits cannot cover self-employment tax. Only the earned income tax credit and the additional child tax credit can help cover the SE tax and also people's own cash payments. So if they don't pay anything in and they don't get EITC and they have no kids to get them child tax credit, they have no payments. So a rule of thumb for estimating how much you should pay along the way, pay as you go, pay about, a quarter of your tax bill from the previous year. That's the simplest way to calculate it. You want to pay this in April, June, September, January. And I had this other slide. Basically, I say, don't get whacked by SE tax. Understand and project what you have to pay and pay a little bit along the way, every 3 months. All right, you can do this online. When we do a tax return, we can create payment vouchers. So, they might not end up using the payment vouchers because they go online and make their payments, but at least the payment vouchers give them an idea of how much they should be paying in on the quarterly basis. All right, so most of the time, people really don't pay enough in, especially in the regular clinic. But if somebody comes in and you see on their CETO, or they tell you, or they give you a statement or confirmation of having made a cash payment on their own, you're going to go into payments and estimates and either add it in federal estimated payments, all right, or add it along with amount paid with extension. All right, there's a couple of different ways to do this, and I will demonstrate that during the practice return. Okay, any other questions so far?
Nope, not in the chat.
Okay, all right. So this is also kind of rare. Let's just skip this. This could be a deduction. If somebody has a business profit and their taxable income is not already wiped out by their standard deduction, they will get to deduct another 20% of their profit. It's called the qualified business income deduction. All right, 600, if somebody had, I don't know, what, $3,000 of profit, they would automatically get another deduction knocked off of their adjusted gross income to arrive at taxable income. Don't have to worry about this very much because TaxSlayer will calculate this for you. All right. The MAEPD stands for Medical Assistance for Employed Persons with Disabilities. To be on this health insurance, you have to establish that you're employed. A lot of people don't really have a regular job, and they can meet this requirement to stay on health insurance by just doing some kind of errands or helping out a family member. They have to make $65 a month. 65, actually 6501, 780 a year. So we do have people coming in saying, well, I'm on MAEPD and they said I had to give them a Schedule C. So if somebody is giving you money, it is not established as earned income until you pay your SE tax. All right, that's another reason that I'm harping on this SE tax. You do not pay the SE tax unless you send it to the IRS, unless you claim it through earned income tax credit, and unless you report it on your tax return. Right? If you just send in random amount of money, the IRS doesn't know where to apply it until you provide the tax return. All right, so we're going to go over this example carefully when we do the MAEPD return. So let's take about 10 minutes to make sure that you are logged into Practice Lab, that you have your practice packet downloaded, or if you're home and are able to print it so that you have it in your hand. Set yourself up so that you can follow the demonstration either by typing along with me or just watching enough so that you can do this typing on your own later on. Okay? All right, we'll see you in about 10 minutes. All right. So I'm going to pull over this screen and hopefully walking you through these steps will get you into the practice lab. All right, so on Prepare and Prosper's training site. All right, is everybody back? All right, yeah, I see that there's somebody who has said that they could not log in. All right, so on our website, you're going to click on training site. All right, I'm going to scroll down to self-employment, click on this link. And then we're going to log into the TaxSlayer Practice Lab. Here's this link.
And right below that is where the packets are for the scenarios for tonight.
So these are the scenarios. All right, so here's where you type in train pro web. It is all caps, no spaces. All right, then you're going to type in your username, whatever you have. Okay.
Yeah, and this is the one that you all created the last time you did your certification tests.
Right. Okay, so now you've logged in, you're going to go to the practice area. And we'll say start a new return. All right, this is where you're going to take your package and create a return by typing in the Social Security number. Now, I'm going to back up a little bit. So with this training scenario, you've got an intake packet, right? 13614-C, and you have some tax documents here. All right, you've got a W-2, you've got this Uber summary, you have a 1099, NEC. And you've got this, all right, some other information over here. All right, I gave you a blank Schedule C to give you an idea of where it's going. There's a mini CTO that we can look at once we understand what we're doing. All right, so the last two documents, the mini CTO down here and the Form 1040, these are actually answer sheets. So don't look at those right away, or if you can, make sure that you understand how we arrived at those documents. So if we're looking at this packet, we see that we have a worker who has a dependent. So right away we'll say, okay, he's probably going to file head of household, right? He has a qualifying person to file head of household. All right, he says he has a job, so make sure we find that W-2. All right, over here, there's a bunch of stuff he left blank. You want to verify that those are blank because they're supposed to be blank, not because he didn't understand. All right, over here, he left this blank. And this is where you have to verify, oh, these are the boxes that need to be checked off. He will have a Schedule C. He does have a 1099 NEC. He's got other income that was reported on his Uber summary. And he will have Schedule C expenses. All right, he says he started driving for Uber in 2025. He didn't realize it was self-employment. All right, so he didn't really do much to keep records, and you'll have to help him reconstruct his business expenses. So you look at his gig report and his 1099 NEC, and you confirm that, yes, he got 8237 of gross trip earnings. Let's see, right here, 8237. There was gross trip earnings and there were some other incentives. So yeah, he agrees that certain amount of money dropped into his checking account. And he also agrees that this other 1099 NEC does not duplicate these payments. So there's two lumps of money that he really did receive. So now we're going to go into tax layer. Now I already did a start new return. If you look on the, let's see, page 5 of your 13614-C, you'll see a social security number to use. All right, so I already started my return and I see that, let's see, I'm looking for 476001217. All right. So I'm going to have to back up a little. All right, I'm going to file head of household. I need to put his name in. All right, his social security number is in there. His date of birth is, let me see, 03/14/1980. His occupation, all right, he might have put this in on his intake sheet because, well, that's his main job, so that's fine. All right, none of these other boxes apply. We need to type in his address, 54. So that should pop in. He's resident of Minnesota. Okay, we need to give him a phone number. Okay, you can put in a or you can put in some kind of email if you want to, but that's not necessarily right now. So I'm gonna hit continue. All right, let me pin this. All right, so you've created a return. He does have dependents to claim. We need to enter from the intake sheet. All right, the child's name is Dana. And his birthday is 04/15/2010. All right, from the intake sheet, we see that his social security number is 477001217. All right, he's a US citizen. We're saying it's a son. All right, none of these apply. Okay, we're claiming the dependent and we were claiming him for EITC, so none of that applies. Okay, child is in. So that part's done. Okay, now we're going to do income. So right, we've got a W-2 form here. And this is something that you see commonly at the regular clinic. Somebody's got a regular job with a W-2 form, and they have a side hustle or gig doing Uber or something, and and you have to separate and recognize that there are two sources of income to report on this tax return. So this is W-2, standard W-2, right? Okay, he works for the state, 7162. Okay,
Hey, Julia.
yes?
We have a question about Dana, where
Yes.
on the IRS intake sheet, gig marked that yes, Dana is a full-time student.
Oh, well, I just say that, if he's what, 16 years old, 15
Mhm.
years old, and we can say he's a full-time student just because he's in high school. All right, well, the answer is either yes or no. I think we do want to fill in all of those lines in the dependency area. All right, you can say it does say on this sheet, answer yes or no. You don't want to leave anything blank. So if he's 15 years old and going to high school full-time, it's fine to say yes. It's more important when a dependent is in college, right? Because if they're over 18, but they're
Sure.
going to school full-time, then they're still a qualifying child for EIC. So it's more important to answer that question when they're in college, but you should still answer all the questions on a dependent line, or I really don't want to leave anything blank on that line.
Makes sense.
Mhm. All right, so let me see this, right, you see the W-2, the person had 55,939. All right, make sure that this 1,500 gets entered. Don't miss the tax withheld. All right, most of the time, these might input automatically, and then the Social Security, Medicare, all of that gets calculated automatically and pops in. All right, you can't really do anything with the Minnesota yet, for the state return yet. I'm just going to put 999. And then Minnesota wages should carry down here. And let's just say, okay, the W-2 said that they had $860 state income tax withheld, okay? So, all right, you want to double check your entries on your W-2 because it's quicker to double check than to have to circle back later. Okay, that looks good. Yeah, everybody needs an editor. Where's Diane? Is this right?
We're all watching. I'm sure someone would tell you if you were doing it wrong. Oh,
Right.
Lucia,
Okay.
Lucia or Lucia says box 6 should be 521.
Which one?
Box 6
In
on Gig's form, box 6 is 521.
okay, how come that? What, I might have mistyped that inaccurately when I was,
Creating the form.
yeah.
I did the same thing recently.
All right, if we were to calculate that, let's see, if somebody wants to calculate, what is 1.45% of 55,939? It's equal to 55,939 times. Okay, that actually, yes, you're right. That actually needs that. So the 811 popped in, right?
Mhm.
All right, so I think I probably, I don't know, somehow I mistyped that. I thought that should have just popped in. And then, all right, so that needs to be 811. So we can correct that in the packet.
Good deal. Ardith is pointing out that the state wages are different as well, which is another error that I have made before because you're just testing out numbers to be like, is this a scenario that makes sense? So on the W-2, it's 35939 for the Minnesota wages.
Okay, sorry. All right, yes, that actually also should be 55,939.
Hmm.
Okay, so if you want to correct that on your packet, right, sorry about that. My goal is also to have no confusing errors on a scenario. Okay. All right, so now we're going to work on the SE section. We first have a 1099 NEC, all right? So this is what you do with it. Going to go to the income area, make sure you're in the income area, and you look for 1099 NEC, begin. Payers ID, this is Uber, so they are 45, 26, 47, 441. Technologies. Code.
I had a quick question if we have time.
Yep,
I'm catching up basically, but I'm stuck on input. When I input the EIN of the employer on the W-2,
yep.
put it in, and it is for some reason it's not fully, maxing out the letters. They're expecting 9 letters. I input the numbers. And I didn't. I put in 416, 41600 712.
7162.
Okay,
Got it. Thank you.
you got it?
Yeah.
Okay. All right, so non-employee compensation, 1576, right?
Yes.
All right, this is important when you are creating a Schedule C for the first time. All right, you entered a 1099 NEC and TaxClair is going to ask you, what do you want to do with it? So you want to say, I want to report it on Schedule C. Continue. And this is the first time that you're doing it. If this existed or carried in from the year before, it will ask you which Schedule C do you want to use. So you'll say, there's no business name. All right, you're not operating under a separate business. Okay, if they don't know what type of business is, then you can click on this link, click on list of business codes, and you can search. So I'm going to say courier. So that will carry in business code 492000. That's the one that I like to use for Uber drivers or Lyft drivers. The reason that the business code is important is it tells the IRS if your expenses and income are to be expected on your Schedule C, especially your expenses. All right, so if you're in a driving business and you say, well, I have expenses for dog food, I mean, how does that make sense? All right, so if you spend a lot of money on dog food when you're a courier driver and you're not transporting pets, the IRS might wonder, why are you spending, why are you writing this expense off? And maybe we want to audit you about it. All right, so we know that there are going to be some general expenses. If you look at your Uber summary, you'll see that they charged the driver service fees. They collected airport fees. All right, to get paid instantly, you can do that and you get charged. So these are all platform fees. Anything that Uber reports to the driver as expenses, fees, and tax, these are expenses that the person can deduct. Right? So we go back into Schedule C expenses. I'm going to back up again. So here's your Schedule C. These are general expenses. So I'm going to start here and I'm going to go into commissions and fees. And I can just write 1977 in here. All right. Another way that I could do this is to say Uber service fees. All right. And then if I wanted to break it down like that, I could say 1879. All right. Now that's some of the reviewers don't like that. They say it's too much of an overkill. So we'll just write down 1977. Right. All right. Now I also know from this summary sheet that there's income that wasn't reported on the schedule on the 1099 NEC form. So I have to show you how to enter this into TaxSlayer. All right, the 1576 carried in automatically, but there's a spot up here in income for gross receipts or sales. You can break it down and just put in 8237, but I'm going to show you how to do it with a descriptor. So you'll say, okay, gross trip earnings. And it was 7421. All right. All right, then you had a different item, which was, you can say total additional earnings or some kind of descriptor. We'll say 816. All right, if you put in the cents, it is going to round it off. All right, so now you have 8237 entered and you have the 1576. So there's all your income. All right, yeah, I jumped ahead to the expenses. We've got the 1977 in there for expenses, right? Mm-hmm. And I don't think there's anything else that applies, right? They don't have any advertising. They didn't pay anybody else to help them. So that's it for general expenses of running this Uber business or being an Uber driver. You can talk to the person about how much did you use your own cell phone? And they say, well, I use my phone probably 30% of the time because, I don't really drive that much. So to do cell phone, you'll go to other expenses, business use of the cell phone. And if they say, well, I spend $100 a month for my cell phone, 100 times 12 is 1,200. 30% of 1,200 is $360. All right, so you'll put that in there. Right, and I think, all right, that is it for income, general expenses, and other expenses. But you also now have to do car and truck expenses. This is very important. All right, this is pretty reliable when Uber says you did 412 trips and you put 6,180 miles on your own car to do those pickups and drop-offs. All right, so we can say, let me see what kind of a car. How about your, I'm going to say 22 Mitsubishi. All right, and he'll tell you this, and he started doing this just this year. Oops. And we'll go by what the report says, 6,180. I don't usually bother with putting in commuting and other. It's not going to change the calculation, but you do want to check this off. All right, I don't have another car. I have my car available on off-duty hours, and I have evidence to support my deduction, and it is written. All right, so this accounts for gasoline, insurance, depreciation of the vehicle, repairs, oil changes.
Julia, for the 1977, it went in the commission field.
Yep.
Why is it called that? That sounds like it should be income and not an expense, commission and fees.
It's an expense because the person earned 8237 from driving, and he also earned the 1576 as tips. That's the income. These expenses are what Uber skims off of the gross income, charging the driver for using the Uber platform. These are expenses. So if the person says, okay, the person actually made almost $10,000, okay, made about $9,700. But out of that $9,700, Uber immediately skims off.
Okay,
Sir,
so that's
these are
Uber's
expenses.
commission.
This is what Uber takes out of it. It's like if you make $10,000 working for Uber, Uber will take $2,000 away. Their service fees, all right, you had to go to the airport, so they collected that up front, took that. You were going to have to pay that anyway, but they conveniently paid it for you, but they took it out of your income, not their income. All right, so these are all expenses. You paid Uber this amount of money, 1977, in order to work as their independent contractor. So you get to deduct those expenses, right? Let's see, so we finished that part. Let's go back to car. Okay, we got the mileage in there. Right. And I think the last thing that we need to do is account for the person having made some payments. Right, they said, they were worried about not having paid enough tax, so somehow they did tell you that they paid $250. Right, let's look at their intake sheet. Right, he says he paid $250 as an estimated payment on January 15th, and then he filed for an extension and he paid $25 to do that. So amount paid with extension $25. Federal estimated payments, $250. All right, so now, okay, I think we're done with that. Was not on ACA. So now let's preview the return. All right, so this will verify your W-2, your 1099 NEC. Looks like he owes $291. So on the tax return, W-2 shows up over here. Okay, let's look at Schedule C. I'm going to zoom past that. Here's the profit and loss from business. All right. 9813 is the 1099 NEC plus the income reported only on the Uber summary. $6,180 business miles at 70 cents a mile results in standard mileage deduction of $43.26. All right, so it carries in there. The 1977 entry of business expenses shows up here in commissions and fees charged to the driver. And then the other expenses are reported in Part 5. Okay. There could be others. And then the summary, just the sum total comes here on that line. So this person had gross income of $98.13. He had $6,663 of business expenses. So his net income is $3,150, $3,150 net income. So that first carries over to Schedule 1. All right, Schedule 1, business income and loss, carries in from Schedule C, 3150, and then that carries on to Form 1040. So this gig's total income is W-2 plus net profit, and that comes out to be $59.89. An adjustment is half of his self-employment tax. So now we're going to look at Schedule SE. He's going to have self-employment tax because he had a profit. If you do the math, his base is his net profit of $3,150 times 92.35%. All right, you see, multiply 5A by 92.35. 5A is, oops, sorry. I'm looking at the wrong line. Oh, sorry, we need to be on this line. Okay, if line 3, 3,150 is his net profit, if that's more than 0, we're going to multiply that by 0.9235. So his SE base, remember we talked about the SE tax base is 92.35% of net profit. His tax base for calculating self-employment tax is 2909. Multiply that by 15.3. Know that there's a calculation on here breaking down 6.2 for Social Security, and 1.45 for Medicare. And so his self-employment tax is $445. Half of that is an adjustment to arrive at adjusted gross income, $223. So if that carries first into Schedule 1, other adjustments. All right, so we're going to get another deduction for adjusted gross income right here. So his adjusted gross income is 58,866. He is head of household, so he gets a standard deduction of 23,625. All right, that's not enough to wipe out all of his taxable income. So he does get a qualified business income deduction, which is 20% of his profit, gets to knock off another 585. So these two deductions, standard plus QBID, is a total deduction of 24,210. Subtracted from adjusted gross income gives taxable income of 34,656. He has a few other credits in here, payments that he made, W-2 withholding, didn't quite have enough payments and tax withheld. So the tax is not just his income tax, right? His income tax was 3821. The child tax credit can knock that down. He has $445 of self-employment tax to pay. So you have to add the income tax plus the self-employment tax. His actual tax bill is $2,666. So he ends up owing $291. Now I'm going to show you the effect of having a mini CETO. And if you can reconstruct this mini CETO, I think your reviewers will be really appreciative. So, before you do all of that, before you start entering information into your return, you might want to make sure everything is summarized clearly on a mini CETO. Or I didn't want to provide this answer sheet first, but you end up doing this. If you can do this with your client, that's great. So you're going to put his name on, his NAICS code, all right? There's a one NEC 1576. There's other income just on the Uber summary of 8237. So the total income is 9813. I know that there are expenses on the Uber summary of 1977. So I put that on there. I know that there's other expense of using the cell phone. He told me it was $1,200 for the year, 30% business use. That gets me $360. So that's another expense. If there was anything down here, maybe during the pandemic, they bought safety gloves to use in the car. You can deduct that. Then you're going to put in the vehicle information, put in the business miles, check all these boxes. All right, check that. Yes, I have an Uber summary account to print out. I made some estimated payments in January and when I filed for an extension. So this mini CETO reflects all the information provided by the self-employment related documents. And then finally, this return, which shows $291 of balance due. I don't provide all of the other documents like Schedule 1, Schedule SE, Schedule, the QBID schedule, all of that. But if you are able to generate a correct return with all of the other supporting schedules and forms, you will end up with the same Form 1040. All right, so let me quickly go through the MAEPD All right, because we want to be done by 7:30. Okay, is that all right? Holly, everybody else ready to go on?
Yes, there is a bit of a conversation in the chat about what miles Uber is reporting on Gig's behalf. I don't know, Julia, if you want to.
Yes. All right.
Yeah,
So
I just confirmed that the online miles that they report are business miles, so they do exclude the commute.
Okay.
you believe that they do it for the commute?
Yeah, Julia, maybe
No,
like
it says it says on Uber's website that they're excluding commute miles. They're referring when they say online miles, they're referring to business miles.
Okay. So they are excluding, like, the miles that you drove from your own house to the first pickup. So I am pretty willing to just go by the Uber report. Whatever Uber puts on their summary, you can just put that in for mileage in Schedule C. I don't really trust the Lyft report because I've talked to Lyft drivers and I asked them, do you think your Lyft report gives you the miles between your drop off and your next pickup? And they said, no, I don't really think so. I feel like the miles they give me are way under what I know I put on my car. And so I tell them, then you need to get something like Stride and track it yourself, right? And compare the two. If you have Stride to report a higher number than Lyft, then you should put that in because you have evidence that your mileage is higher than what Lyft is giving you credit for. All right, so let's see. Let's exit out of here and go over to, get rid of that. Okay, let's pick up Maeve, all right? And this one is comparatively easy. So if you look at Maeve's packet, she's got a social security statement. That means I can start a return with this social security number, 476001218. All right, here I am. I did that already. All right, she's single. I'm not gonna, I can say retired, or disabled, whatever. Um,
I like how all of your customers just live here at the PNP main office, Julia.
they all live here.
What a service we provide.
I know. All right, that means, they don't have far to go when they come to do their returns. Yeah, but she lives on the third floor, right? The apartment 350, not suite 450.
Good.
All right, so okay, she's got Social Security, right? So we got to plug that in. All right.
And Julia, these
Yeah,
people know that they have MAEPD, right?
yes, they know.
And they tell you.
Yes.
Okay.
All right, so we put in her Social Security, and if you look back in her, let's see. All right, so I made some notes. All right, this is something that I would handwrite on the intake sheet. She is self-employed as a dog walker for family members. They paid her a total of $800 in cash. She's been on MAEPD for several years through Ramsey County, in addition to receiving her Medicare. Now, if you look at the MAEPD handout, okay, you want to read through this to make sure that you do everything that you need to do for your MAEPD recipient. I put in her Social Security. Now I have to do her income from being a dog walker, because if she doesn't include it on her Social Security, on her tax return and generate the SE tax, it will not be considered self-employment income. She will not be considered employed for purposes of MAEPD. She won't be able to keep her MAEPD insurance. So I'm going to say other personal.
There's not a code for dog walking?
No,
Man.
not. All right, so. All right, I can go in here. All right, there was. Oh, also on the other return, because it was the first time for the Uber driver, you want to check this box. This is the first Schedule C ever filed for the business. All right, so cash accounting, all investment. So you want to check these boxes off. So the only income that she has was the $800. Nothing is carrying in. So you're going to go to gross receipts or sales. And just to practice using this descriptor, this is dog walking. All right. And we're going to give her $800 because 780 or 785, which is 6501 times 12, is cutting it too close. And you do not want to do any expenses, because if expenses drop her net income below 780, she will not qualify. So ignore the expenses. If she does have expenses, make sure it doesn't drop it below $800. So if I just put in her income and her Social Security, this is, let me see. Okay, I don't think I have to do anything else. All right, we're going to, okay, health insurance. All right, now let's generate the return and look at it. All right, so she had Social Security, didn't have enough other income to make any of the Social Security taxable. All right, here's her SE income, $800 net profit, right? Income minus no expenses. She had a whole profit of $800. $57 is her adjustment for half of her SE tax. So that's a subtraction. Now it gets you to adjusted gross income of $743. All right. Her standard deduction is more than enough to wipe out all of her income for taxes. The only tax that she's going to owe is self-employment tax of $113. And this tax return, by including Schedule C, all right, here's her Schedule C, $800 income, no expenses, net income of $800, and her Schedule SE, which shows that her SE tax is $113 for Social Security and Medicare. She has incurred a balance due of just for her Social Security tax, right? $113 just for her Social Security tax. Because she's under 65, she still gets earned income tax credit of $55. So she has $55 left to pay. This return shows that the tax is for SE tax. When she pays it, she establishes that this $800 is earned income and she qualifies to keep her MAEPD. All right, and so I think that is it for that's it
Julia,
for the presentation. Go
what
ahead.
do you want the takeaway to be about MAEPD?
You have to report the income as earned income so that it generates the self-employment tax obligation. If you don't pay the SE tax, the dog walking income is not earned income, and you are not an employed person with a disability, right? To qualify for MAEPD, that means medical assistance for employed persons with disabilities. Without the earned income, you are not employed. That's why you have to file the tax return and pay the SE tax. So it's really important for them to keep their health insurance. They have to work a certain amount of, they have to earn a certain amount of earned income from work. They have to pay their SE tax. You have to file the return to incur this SE tax obligation. And then you have to give them a copy of their federal return to take to their county to say, yes, I earned my obligation of earned income and I paid my SE tax. So that's why this money is not a gift from my family. This is money that I earned to keep my eligibility.
Right.
Okay. So it's a very simple return, but there's a little bit of trickiness in making sure that it's done correctly. You know, I don't give them the expenses, otherwise it will drop them below the threshold, and also provide a federal copy to give to their county worker. So are there any other questions or comments we want to add in, either Holly or the tax volunteers before we wrap up for tonight? Thank you.
I have a question.
Yep.
If she got 900 for walking the dog, should we put in some expenses to bring it down to 800?
Not necessarily. I mean, $900 is going to generate on about what, $15 more of taxes.
Yeah.
You
Okay.
can, if you want to, if she has legitimate expenses. I use my cell phone to keep in touch with my family. If I drove from my house to my sister's house to pick up her dog, that's commuting, so you can't deduct that. It's almost like most of the people who do this self-employment to keep their MAEPD, they do almost the bare minimum anyway. So the issue
Yeah.
is to make sure they don't drop below the bare minimum.
Yeah. Okay. Thanks.
Linda asked, do I need to check new for Schedule C every year? Well, if we did it the first year and he comes back next year to P&P, you'll see that when you enter his first 1099 NEC, TaxSlayer will ask you, which Schedule C do you want to attach it to? Because the Schedule C from 2024 will carry into 2025, and then you can just pick it. And because it's not new anymore, you don't have to check that first year box.
Julia, Chuck had asked if there's additional training required for someone who would like to occasionally sub in the SE clinics.
To come to the SE clinic where you would see more complicated topics, please attend the January 7th evening or January 12th, Monday morning, part 2 of SE training. We'll talk about business use of the home, cost of goods sold. What's the other thing? The other main thing that you're not allowed to handle. Getting tired and blanking out. Yeah, so we'll talk about all the other topics that you cannot handle in a regular clinic, right? Income more than $10,000, business use of the home, cost of goods sold, and depreciation. Okay, major asset purchases. Depreciation is a big topic that we handle at the SE clinic, and you have to do the training to be able to handle that topic. So please come to the January trainings, part 2 of SE training, to be able to volunteer or sub in the SE clinics. Thanks, Chuck. I know you've done a great job coming in over the summer.
Well, folks, thank you so much for joining us tonight. If there are more questions in the room, we welcome them. If you are ready to head out for the night, thank you again for being with us. And special thank you to Julia for really just walking us through a simple Schedule C. Hopes are that you all feel more confident with this process after seeing it done by an expert and talked through by her.
Yeah, thanks.
Thank you, everybody, for being here. We'll see you in January.
Okay, bye.
Thanks, everyone.
Thanks so
Bye-bye.
much.
Whoops.